Good evening, everyone. So we heard a story that how the banking sector has evolved, where there was a calculator which used to print. Let me make this industry more ancient. There are many stories of when banking started. The one I found most believable was the Crusades, where when the East Europeans would come to Jerusalem, they would they would want money because they are going on a crusade for years, but there are bandits en route, so they would put the money with someone in Europe and collect it at Jerusalem, and this is around 10th century to 12th century. So that was the most credible one. There are other stories also. So that's how ancient this industry is. And from there to what I was witnessing right now, well, that's something we never thought of. No, none of us. I haven't seen that calculator, but I'm sure I've seen ancient stuff. So thank you everyone again for joining us this evening. As you said, as it was said in the beginning, that banking is the backbone of the economy. It is the backbone of everything we do. Everything it touches our lives. Me, everyone, every day. We are dependent on it. But yes, as was said in the beginning, that we hardly go to banks anymore because the things have improved so much. That's because tech has taken over, and now AI will probably make it even more easier for us. But then the challenges begin because banking is all about trust. It's all about safety, and if that gets compromised, uh, people will stop believing in banks as well. That's the one institution people still believe in, as Ranju was mentioning to me before we got on the stage. So, this is what, so here, as, Deepak was mentioning that we talk about decision making, the AI human balance, and the governance layer, how much it should be. And that's what we're going to talk about. We won't get too technical about it, but we are going to get a high-level view of how the banking industry has adopted the changes, how open is it? Because there was one more mention of some banks are very high on tech, some are very low. So there is a disparity. Why is that? Is that the DNA of that bank, or it is about mistrust on probably the technology that is being offered? So that's what we're going to look at. So next 35 minutes is going to be about that. Okay, I need to stand, it says. No, I don't need to stand right now. All right, so Sandeep, I'll come to you first, and if I may ask you, we saw all the available resources that we have in terms of technology, AI, that can really change the way we bank. How open are the banking systems right now? And we heard that some of them are really high on tech, but some are not. So how is the Indian banking system preparing its workforce, especially, and organizational, changing the organizational culture to collaborate with these kind of AI, especially agentic AI systems?
Thank you, Saurabh. Thanks to ETBFSI, Intel, and SAS for giving this opportunity. Well, when you talk about preparing the workforce or banks getting ready for agentic AI or any new technology which is coming in, look at the way banking has evolved in India over the last 40 years. I started my first job in bank was in 1985. It was 40 years back. I've seen how it has evolved in the last more than 3 decades. Uh, we started with bank ledgers where we used to do manual posting and addition, subtraction, everything was done manually or a piece of paper. Then we used to arrive at certain figure, post in the ledger. Then came the adding machines, and the adding machines with printer were an advancement over that. And then in 1990s, we saw the ATMs coming in, followed by, after 10 years, followed by internet banking, mobile banking. And I still remember we used to put a banner outside the branch. Your bank is partly computerized with a lot of pride. Then the next stage used to be, we are proud to announce that your branch is now fully computerized. Okay, those were the days. I don't know how many of sitting here would were there to see all those things. And what was computerization in those days? Instead of writing a passbook, it used to be given, it used to be printed by a machine. That was computerization, the definition of computerization, right? Or instead of posting manually in ledger, we used to have those old 386 computers where we used to do the the ledger, whatever postings are to be done in ledger we used to do it in that machine. And at the end of the day, we used to get reports running into pages and pages for verification and other things. But then when ATM came, people adapted to it. The staff also, the workforce also got aligned with the computers which came in the 90s, followed by the ATMs. Initially, there was a reluctance to issue debit cards, thinking that the person forgets that debit card somewhere, or if the person is asking for 500 rupees, comes and complains that he got only 300 rupees, how are we going to deal with it? Then slowly people started adapting to all these things. And when internet banking came and mobile banking came, people didn't believe that banking can happen outside the brick and mortar branch. That's what Mr. Bhagat was talking about. Now, when we are talking about all these things, machine learning, AI, agentic AI, and all that, as and when they are getting unrolled and are getting ushered in the banking system, we know by our past experience that the workforce will automatically get aligned to it. Now, where do I use agentic AI? Since today's discussion is around agentic AI, where do I use agentic AI? And I will go to the extent of saying whether I need agentic AI to begin with. And if I need it, banking there are several areas. We have business lines, we have hygiene departments, we have efficiency departments, we have foreign offices, and we have compliance, risk, fraud management. Where do I use this agentic AI? Whether it is really going to help me, whether it is going to really add to the productivity of my people. Unless and until I evaluate that and arrive at a decision, it's not that people will jump on this technology. At least big banks like SBI, they will take a very guarded, they will have a very guarded approach towards agentic AI. As far as our bank is concerned, we have already started our work on that. We'll do a research. We'll see which are the areas where it can be benefited. And then once we are aware of it, the system is that there are workshops which are conducted for the frontline staff. There are publications which are sent across announcing the arrival of the new technology and making people familiar about it, and also educating people about its advantages. Along with that, the risks which are involved and how to protect them from this risk, and at the same time, how to use this new technology to their advantage. That is how it will be rolled out in the banks. That is what I feel.
All right.
Thank you.
Thank you so much, Sandeep, for clearly stating your position in terms of adoption. And I think stakes are higher when you're big. You're bigger a bank, the bigger the bank. So, Deepak, I'll stay with the bankers, and again, jump in wherever you want, because probably I can ask just one question and let you guys speak because you know better than me. So, Sanju, I'll come to you and ask you, where are you in this journey of adoption, especially in the function that you overlook?
Yeah, sure. No, thanks. And thanks, ETBFSI. Thanks, Saurabh. Thanks, Deepak. I think for hosting and bringing this bunch together. Extremely topical. I think all of us as consumers, as individuals, are exposed to the benefits of AI. Banking, people would wonder why it continues to be more difficult than it should be right from the time you get onboarded with a bank. On an Amazon or any other place, you get onboarded instantly. But when you have to onboard yourself with a bank with the same kind of KYC details, it seems like it takes forever, and I know that this is a pain point that most consumers would tell us. So why is there this difference? What kind of tool is AI for solving problems? So are there problems to be solved within a bank? I think plenty. Are there problems as far as engagement is concerned, customer experience is concerned, employee queries and solutions are concerned, or even at the back end to look at dashboards, to look at data, to do credit underwriting? Every single piece you touch, there are problems, and things can be done more efficiently. The question is, which tool is best suitable for solving that problem? Is AI a good tool? And we ran this kind of a small group discussion in the bank recently, where we asked, what if the same experience as consumers, we bankers doubling up as consumers and looking at our entire process and solutions and thinking which solutions can be better and which can be done better. And we did come up with various ideas and places where AI could really help us. Simple things, I want a dashboard for how my business line is functioning. Can AI do a better job of what our current product managers are doing? Yes. I need to understand a particular sector. Can Gen AI generate a much better output by looking at 10 different reports and giving me a visual representation on what is the SWOT of this industry, what's working and what's not working? It is. Can AI tell me how are my customers looking at the unified customer journey, loan application journey, how much is falling off, which ones are going through, et cetera, et cetera? Yes. What agentic AI can do, for example, staying on this loan journey discussion, I know that I have a fully digital online journey for my customers to apply for loans, either on the personal loans and do it on an end-to-end basis and get a sanction in X number of minutes. But there are drop-offs, and there's a significant number of drop-offs because sometimes the customer wants more information. He's doing it at night at the comfort of, after he's done his housework and his office work, etc. But he doesn't have anyone to ask at that time that, I want a breakup of the rates. I want to understand what is this charge that you've mentioned. I want to understand why are you asking me for this document? And he drops off. If an agent was involved and was able to pick it up from there in his context, in his paradigm of time and convenience, I think we would have far more success. The success ratio of these digital lending would have been much higher. So it's one thing is about aspirations, the other thing is about responsibility. Aspirationally, I think we can do a lot of things with agents, which effectively is human out of the loop and an agent coming in. And human going out, agent coming in can happen in a very non-intrusive way. In an intrusive way also, which would have been intrusive if a human was concerned, is not intrusive when a machine or an agent is concerned. So clearly there are benefits of involving an agent as far as an engagement layer is concerned. But the responsibility bit, and I think we'll talk about it later, is also being a bank. There are aspects about safety, trust, accountability, which is also one of the topics for today, and which are going to be paramount. And bringing these two together is going to be essential for AI implementation, which is why some of the technologies that we choose, while very promising, take a lot longer to implement, because when you begin to test it against the guardrails, I think it just takes a little more time to fructify. So on our journey on AI, I think we are right up there using AI for a lot of our businesses, a lot of our back-end fraud detection and underwriting too. But as far, even Gen AI, we've had use cases within our bank where for employees querying on, whether a particular regulation has changed and updated and how does it fit into products and processes, that we've been able to see through. But Agentic, again, a step forward. The employee knows that this regulation has changed, and how does it then kind of fit into the escalation matrix or clearance matrix? That's something that will be very helpful.
Thank you so much, Ranju. And That was you touched upon very important points like how it can solve my problem also, because as you said that I don't have time during the day, uh, you know, to go to bank and look at what my statements are saying and all. It's only after I'm done, and if there is something which can come, it will really be helpful. And there's a second point that you made, which I'll come to Deepak later after I go to Shashwat, is about internal versus external processes. The adaptability, probably, you know, the mindset changes or not. The bank, Shashwat, your initial thoughts.
So from a banking in or bank perspective, we have heard our co-panelists. I think is there a need? There is. Uh, is there adoption happening? Yes. Have we started researching whether it will fit into the solutions or not? Yes. But let me bring functional overview. I manage BIU, so I'll give you how the journey has been so far. Uh, so I'm not too old in the system, but when I started, uh, people were probably taking gut-based decision, not data-based decisions. And when we used to talk about data, the discussion was uh, data hai chahiye, but I mean we can take decisions without data. Then data started kicking in. Uh, then data kind of accumulated, and it took people by surprise that how big it could be. So then they wanted reports, from data to reports. Uh, and then reports kind of brought in some efficiency and decision making. Uh, Post reports and the report accumulation started happening. We had ETL tools. So in one inbox, probably 90 to 150 reports each day hitting. So people got overwhelmed that what do we do with this? So they wanted dashboards. Shifted to dashboards. And then in dashboards, there were things happening kind of in minutes, sometimes in real time. And there were humans which were missing those real time updates because humans have their own limitations, while the intelligence cannot be questioned. But the system works with limitations. Uh, I think that's where agentic AI kicks in. So information to report to dashboard to everything that was available, that efficiency has already been built in. What agentic AI will bring in is what was the missing link. So from information to action which can be put in production. Challenges, obviously, in fact, at some point of time, even we are experimenting at our end. And we do see that, like it's easy to say that the agents will bring in orchestration. We will have 5 agents who will go and get data from or get the output from 5 different processes, accumulate it over there. We'll have an orchestrator who should be giving the final output, and from there it could be connected to whatever processes that it is needed. Trust me, it is not that way. It takes a lot longer to teach the agent to what needs to get in, how to do the prioritization. In most of the cases, because it's new and we haven't seen where all it can fail, we do see there are a lot of probabilities that we would not have estimated initially where it is going wrong. So early days, but a lot of promises, lot of promises.
Thank you. I think DCB is one of those banks I've seen at least who's been working with fintechs, especially to get as many to be agile. I think you're working with Neo, if I'm not wrong, to get yourself more agile compared with probably some other banks who are traditionally legacy banks, and obviously their stakes are much higher. So Deepak, I'll come to you. While the question that I thought I'll ask you is, what is your opinion about agentic AI in general and specifically for banking? But I'm going to top it up with another 2-3 observations that I have from here. One is which Sandeep said, that we need agentic AI, and if we need, where all do we need it, right? Not probably everywhere. Then, we also heard that from Ranju that internal versus external processes probably where needs are different, requirements are different. So keeping all this in mind, if I ask you, how do you see the entire banking system adopting to agentic AI, your views?
Sure. So, I think the what's changed right now is the the uptake of technology, the delta is right now a lot more faster than maybe it was, say, 2 decades ago. Because the technology is changing so fast, and not only the technology is changing so fast, the expectations of customers is increasing also at a massive rate. That's the bit, because it's like what we used to call a 9 to 5 problem, right? Which was, when at 9 to 5, when you worked 20 years ago, you had the best computer, the best internet connection, the best software, right? But that's not the case anymore, because when you go out at 5, at home, you have the most probably a lot more faster connection, a much faster computer, and now even access to these sophisticated tools like Gen AI, right? So technology adoption is happening a lot more faster because customers get exposed to these technologies very quickly. So their expectations are that much more higher. Trust is, like you said, is a very, very important thing, but trust, over a period of time, sometimes you just need one mishap for the trust to go away, right? And I can tell you, 10 years ago, if you were standing in Market Street in San Francisco and a car pulled up with no driver, you were not going to get in, right? You go to San Francisco today and you call for a car, you get a car without a driver, you just don't think twice, you just get in and you go, right? So there is that level of trust that sort of builds up very quickly, but as you can imagine, it just takes one accident somewhere for that to fall. So it's kind of interesting how AI is like slowly infusing into our day-to-day lives. And therefore, like I said, the expectation from how a bank should treat a customer is getting that much more harder, right? And of course, the advantage that some of the fintechs have is that they don't necessarily have a lot of the regulatory overheads that a bank faces, especially if I look at from an SBI perspective. They have, I always used to remember one of the Guinness Book of World Records had 33,445 branches for the SBI. It was the largest amount, I think it's somewhere in 85, 86, right? But that's just a scale of, the bank in terms of the adoption is going to be measured. It has to be, right? But in case of some other folks, they might go a little more faster. It's going to be uneven going forward, right? And from the internal and external process, that's the challenge. Last year, there were enormous amount of implementations around Gen AI within organizations worldwide, because I think there was a feeling of, it's called FOMO, right? A fear of missing out, because everybody heard like, my God, Gen AI is going to be the differentiator, it's going to change everything. And there was an MIT paper published on 5 last week sometime, which spoke about 95% of those implementations last year didn't really meet up to the expectations. And the reason for that is, there is no doubt that I think organizations will definitely benefit. Banks are definitely going to benefit because there are personal productivity gains that are happening with Gen AI. I think the challenge that most organizations faced last year was translating those personal productivity gains into business productivity. The business processes changed as they were. So I think this year is going to be more about reimagining that, which is how do you take all these personal productivity that we have and incorporate it into the business. So I believe there's a new word out for it, which is called ROMO, which is a relief on missing out. So people are more happy saying, like, okay, we're going to sit this one out, let it play out by itself, not be the first one. So I think that's what we're seeing also a lot in the market. So that's how it is.
Okay, all right. I like that Romo. I'm going to use it somewhere where you people are not there, so that I coined that term.
Sure.
No. Yes, please.
What I said is that sometimes we consciously stay behind the curve rather than trying to be ahead of the curve. It's a very strategic decision. Being a highly regulated entity, even though the technology may sound very exciting, there are proven use cases of benefits. Then there are regulations in place. Recently, RBI has come out with a responsible AI paper, which is yet to be translated into an actual circular. how do we go about it? And what happens is that the technical maturity, the technology maturity is at various levels among the banks that we have in the Indian banking system. All may not be at the same level. So even if the adoption has to happen, it won't be uniform. It will be at different point of time, at different levels. And then again, as I said in the beginning, there will be a strategic decision to delay it, wait and see how it plays out, how safe it is, whether it really leads to some kind of a benefit, and do I still remain within the realms of the regulation by adopting this technology. I remember 5 years back, people were gung-ho about blockchain, then metaverse, right? I attended some events also dedicated to these technologies. Yes, those technologies are still there, but they were never adopted in a massive scale. When we talk about agentic AI or Gen AI or machine learning and all that, adoption will be there. Every bank would like to stay relevant. No bank would like to still function in the older ways, despite emergence of new technologies and other the peers adopting them. But then, at what level to adopt? At what stage to adopt? And up to what extent to adopt? Because there is a cost element as well. So, this all things are there. So let us wait and see how it plays out.
No, and agentic AI is also a lot more about decisioning, which previously, as you pointed out in your presentation earlier, we talk about automation, which is far different from what we're talking about an agentic kind of an application. And decision is not purely about logic. When humans are involved, there is a layer of emotion too. Again, to his example of the travel thing. AI is able to tell you which flights are cheapest, or which hotel is cheapest, or which hotel is closest to what your activity is going to be. But when a human is taking that decision and he's evaluating through the difficult route of doing it himself, looking at the various fares, there are other emotional bits to it. Someone might prefer a particular airline for some reason or the other, or a particular hotel experience. It might not just be about rates, it might be something about the facilities, which may not be amenable to be coded in the language that AI would understand. So to that extent, there'll be limitations also to how this, like in a financial services context, I would love it if an agent would look at balances of our customers, and if he sees a huge bonus coming in, which you would experience multiple times. So then there is a nudge from the bank to say, hey, Deepak, would you like to get better bang for the buck? I have these options, put it in a deposit. That is one agent work, right? The second agent should then take over and actually place some of those deposits. But what is one person's convenience might be other person's intrusion. And he might think this is breach of privacy. Why is the bank coming on to me like this? Because I will not be his only bank, and there'll be 5 other banks reaching out to him with similar requests, and it might be annoying at some stage. So I guess, when we deploy agents in an external environment facing a customer, that bit of balance to see, where is that overlay of emotion? Where does one get defensive and begin to think that, I don't like all of this? It happens in the real world today too. There are customers who are comfortable with sharing data because it only gives them convenience. And there are people when your app asks, allow tracking of activities across apps in the bank, across your phone, they would say no. Someone would say, okay, it's okay if you give me better insights and if you give me better nudges, it's okay. So that balance, I don't know if you have any take on that, but that's something that I think one would be cognizant of.
Oh, that's a hard one because I think it's like finally you're going to have. Again, looking at a crystal ball, which I do believe that. I think everybody in this room is already carrying a personal agent in the form of a hand phone, right? So it really does know more than you do. So it actually will know that when you have actually said, no, I don't want to, the agent recognizes that. So I think why this is providing a lot of excitement is essentially the fact that it allows you to. I guess the productivity piece is the big piece, right? And most of our observations have been around that there's an enormous productivity gain that's happening, which is like hard to ignore. And like I said, it's a technology that historically I said would not be available that swiftly. But now, I really do mean it. My dad uses it, who's 84.
Kid uses it.
My kid uses it, who is 14 or 13 or 14, right? So it's become so seeped into our, and this is that whole technology adoption, and it becomes part of your day-to-day life, right? And agents, to our mind, will get there. Again, it's a very, we are on a hype cycle right now, right? It will settle, and the technology is real, but it will settle.
It might not go from 0 to 1, but 0 to 0.5 is also a journey.
It is a journey, yes. I mean, like they say, you'll have to walk before you can run. So that's the way we look at it.
Can I
Yes,
just
yes, please.
So my personal take on this is like not giving an option is also it's not the right thing that will do with the consumers. So I am in agreement that forcing anything, whether providing them information about without asking them or any other product sales or for any other thing, that's a ethical dilemma for most of us as banks. But not providing them the option to choose, because not everybody is comfortable enough to make choices based on their understanding. Some of us would not like the suggestions coming in, and some of us would, because probably they are not informed enough to arrive at those decision points. That's where giving them an option, probably with a consent, is a bit. I think that's yeah.
Right. I like this kind of panelist who, after one question, has taken over the conversation, and I just have to sit here. Yes, making my job easier and life easier. On that note, with your permission, if we can look around and see if we have any questions. Yeah, I see one and immediately here. So, yeah. Yes, please. A minute, sir. Yeah.
The first wave of technology, which was in 90s, it was difficult because it was a very new thing.
That was a complete new introduction.
Complete new introduction.
Yeah.
As compared to that,
Yeah.
when we talk about agentic AI or any technology, it won't be all that difficult. People now know that
In some form or the other
technology
places also they are
has
using
come
it.
has come in the system, and it is there for last 30, 40 years. The thing is that it is coming in a new form, and we need to gear up ourselves to adopt it.
Correct.
So, adoption, the friction will not be that extent.
Correct. Yeah. Yes, please. If you can introduce yourselves and keep the question brief. Yeah.
Hello.
Yeah. It's okay.
My name is Anand. I'm the data protection officer for Kotak Mahindra Bank. So like you said, Romo, right? I say ALAP is what we follow in banks, as late as possible,
Right.
which he alluded to, right? And on the empathy piece, right, there are agentic AIs which are being trained to have empathy also. But again, with the extent of automation that's going to happen, maybe there'll be a reverse of it to humanize the processes also at some point in time.
Sure.
Right? My question is around, where does governance start? Is it after you start using it, or even to get onto that journey of where to use it or not? Do we start the governance there? Because the challenge that I am facing in my job currently is the technology. The CTO has budgets. He's just, it's a Cambrian explosion of usage of AI. Nobody talks about ROI. I'm a bank. So how do I manage that piece of ego, right? If I may call, because a lot of us manage egos at our work. So where do we start this governance process? And do you have any thoughts around that as a panel?
Yeah, please.
Typically, what happens is that any new thing which is to be adopted, before adoption, there is a long process which is there in place. Something called in principle approval. It goes through various It goes through various stages. What will be the business case to adopt any new thing that is coming in, even if it is a loan management system for that matter, which is a much simpler technology. Whether I should go for it, if I go for it, what all benefits I am going to get, and without that, what benefits I am getting, a comparison, an ROI, then the human resources element, how many people will be required, whether I need to reduce my existing workforce or I have to add more. I have to go to market and search for a talent which knows about this technology, rather than spending time on training my existing people who are used to do work in a particular manner. So there is a thought process which may run, which may continue, which may be there for a duration of sometimes 2 years also. So I remember when we decided to launch YONO in 2017. I was general manager IT digital banking at that time. It took us 3 years to decide on that digital bank. It was the first digital bank for the country. We took good 3 years to decide on whether to go for it or not. So there is a system in place.
My question is, do we have that patience in
You have no choice. You have no choice but to go through that process.
but where do you put that governance? Within AI?
No, the governance starts from the day one itself. You start talking about the governance that will be around this new thing from the day one itself. And as you go about and as you move ahead, what you do is you keep on tightening this governance, you keep on fine tuning it as things unfold. Because on day one, you might not be knowing how it is going to play out. But as and when you come to know that these are the things which are going to happen as we move ahead in this journey, then what all I need to do to further strengthen my governance or to loosen the governance also. Because sometimes a too tight governance can be counterproductive. All these things over a period of time, they are put in place before banks embark on any new product or new technology or adoption of anything which is something which was not there before, but is something which is coming new in the system.
I think Deepak, this weaves into what you talk about is AI, human balance, and the governance layer. And where does it start?
So AI would not be possible without data. So the first place where you decide governance is you start with the data, like a data ethics framework, right? Which is understanding where you're getting your data from.
Wouldn't it be called the data governance rather than the ethics, which comes later?
Well, the governance is part of the ethics framework. So the whole data ethics framework, governance is just one piece of it. And then you'll have other pieces in terms of monitoring, right? Quality management, because your bias builds up at the data level. So you got to capture that at the data level. Then, of course, you have a whole AI ethics framework, which is when you're actually building models out and then deploying those models out. So it's these couple of frameworks that are there of the journey of the data from point of provenance to the point of decision. You'll have to follow that entire process and figure out where these ethics pieces actually fit in. So for us, especially in AI, because the ethics part is very, very important. You can actually go to a paper that a bank actually implemented a large language model as a credit decisioning, right? So when they were looking at the data, they had to specifically say 5 times, please really, 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 really do not look at the data bias coming in before you decide on the decision, right? But that's a bias coming in already within the model. So I mean, there are these frameworks that are right now folks are working on. I mean, SAS has a data ethics framework and an AI ethics framework, but that needs to be in place before you embark on any agentic AI journey.
Which is a challenge because you don't have the foundation currently in any of the enterprise organizations.
Well, so just to extend that, I think it was there, right? Because what was happening is, if you look at maybe the start of the century, you had something called the BICCs, which were Business Intelligence Competency Centers, right? At the turn, maybe in 2010, 2012, they become ACC, Analytics Competency Centers. Similarly, you'll have to have a framework of AI competency centers, which are start with people from different lines of businesses and are then, suitably embarking on those journeys, but within the ethics framework listed in there.
No, the foundation is very much there. I don't know in what context you are saying the foundation is.
No, I'm talking about an integrated data risk management strategy.
Okay, I think we'll see if we have another question. We have time for private discussions after. Any more questions, anyone? Because we have a time limitation as well. At the back, there is one question. Quickly, if you can keep the question brief, and definitely introduce yourself.
And please don't ask if AI is going to lead to loss of jobs.
Hello, my name is Kamlesh Kumar, and I head rural business finance, decision science practices at L&T Finance. So my question is related to, so we are talking about all those like ethics and all those around agentic AI. But think of the decisions, when a human make a decision, it makes mistake. So agentic AI is nothing but it's a kind of an algorithm. So it can make mistake. So we should rather look after that how we can minimize that mistake rather than just targeting that there should be 0% mistake. Then only we are going to take agentic AI for any decision making. So do you have any opinion on that? That we should go first with what are the experiences and how the outcome is coming rather than first start making a big document around that this should happen, this should not happen, and then we should go for agentic AI?
I think, here the possibility of mistake at scale, once implemented, is far more than a human error. When we talk of human error, I think that error happens once products are in place, processes are in place, people have been trained on the product and the process, and then people are released on the field, right? If a mistake happens, we call it a human error, and it could be an internal process or an external process. But once you implement an AI system, because it's not just automation, it's also about the system learning on its own and beginning to decision on its own based on what it is seeing in an environment which may or may not be visible to a human, chances are you lose control, the explainability bit of it. How did it arrive at a decision for deciding a go, no go on a credit, for example, or whichever other situation. And the repercussions given a regulated entity position that we are in can be extremely humongous. Could it lead to breach of trust because of a bias coming in, because of loss of financial elements, because we are talking about moving people's money. And that's not a risk a bank is in a position to take if an error happens at scale, which is why we are very, very, very sensitive as far as agentic AI implementation. And, it's at a very nascent stage. It's very, very exciting because I think the potential to do things is humongous. But we are also cognizant that as it does those things, is it going to lead to data privacy issues? Will customers come back and say, I didn't mean this data to... You've heard about this Gemini incident, right? About the mole on the left hand and right hand, I don't know which hand, but effectively not displayed, and yet the data was available in that interpretation. So customers... If it was a sari, I think people were okay. But if somebody's financial data got exposed in that process, I don't think, anybody's going to let the bank just go away lightly. You won't let us go, if your financial data got exposed in any way. Which is why I'm saying, all of these concerns, one needs to plan for it. To his question on, do you use AI to monitor an AI system? It's possible that you would use an AI system, but you will still need to have a human in the loop to begin to understand that, this is what was the report that came back to me, but what does it mean? Because an AI can throw up multiple reports. If in a fraud management system, I put algos and I say, please show me what happened in these scenarios, I will get a lot of reports, right? The question is, what do I do with those reports and how do I intervene in those reports? And maybe a human is necessary for some of this. I don't know if any of the panelists have a different take on this.
Have any other different final thoughts? We'll have to wrap
I
this
think
session.
I'll echo the same thing, perhaps. I think anything that is related to AI or agentic AI in particular that we are speaking about, the cascading effects could be massive, and it could completely be irreversible. So, implementation without enough experimentation and having enough understanding of where it can fail, and it's not a good idea.
Okay. All right. So, in the interest of time, we will like to wrap up this panel discussion. But I think what my key takeaways would be, and from this panel, is that ROI is something that is really because I hear it in different forums, not only in banking forums. It is across. I had the GCC, coverage, and the same thing. The Global Capability Center, same thing. ROI is on AI implementation, agentic AI. So that's where I think banks are. Everyone is looking at. But it's there. AI is there. Agentic AI is there. We all are using it. It's going to be in banking system. It's already there. Probably not on our faces. It will be there in no time. But the word that we heard, Romo, I don't know. ये पहले आपके चक्कर में बस ना छूट जाए जनाब. So I think that is something that we'll have to be mindful of. So that, and obviously, as you said, that not giving the option is also not the correct thing for customers. So on that note, I thank you everyone for joining this panel, and thank you panelists for this wonderful free flowing session. Thank you.
Thank you.